All right. Hey, everyone. Oh, hold on. My mic is really loud. Hold on a second. Let me adjust that. Hold on a second. I thought I adjusted that. Just give me a second here. Sorry about that. This microphone. Okay, that should be better. All right, anyway. Hey, everyone. Mark here, Mark B Markets. Thanks for joining me. Let me adjust this over here one more time. Let me just make an adjustment here. All right. Hey, thanks for joining me for my live stream, my Greenbridge Investing live stream here. We're going to talk about Bitcoin. We're going to talk about the stock market. We're going to talk about gold. We're going to talk about that trade of the week and a few other things here. Okay. So again, thank you for joining me. Now, if you're new to the chat, please share the symbol or the market that you'd like to know about in the chat now. So when I get to the chat, I can answer your questions. Okay. So again, I want to try to spend maybe 10 to 15 minutes on my analysis portion, and then I can spend the rest of the time answering your questions. All right, so with that, let's begin. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Also, let me know if the sound is off. I mean, I tried making some adjustments based on what people told me, and I think I've got it right now. Okay, anyway, so if not, let me know. All right, so here's the thing. Let's begin here with Bitcoin. Now, I talked about this the other day. I talked about it on the Talking Markets show yesterday. There was a sell signal in place, okay, when we took out this low of 39.5. I talked about that. Now, we had an aggressive swing trade that I sent out at 39.5. So I gave people a choice. I mentioned it in the chat room. I said, listen, if you are uncomfortable with taking the risk of this thing going to the stop, which is at 34.5, then you should get out now, okay? You should get out, you should make that adjustment, but only you can make that choice. I was not about to send out an adjustment. I wasn't gonna exit early because I don't react, okay? So usually it's not a good idea to react. Usually it's let the market do the work for you. If that means getting stopped out, then it means getting stopped out. So that's the thing. So right now, Bitcoin's not looking so good. Again, you're in the same situation. If you don't like the idea of this thing going to 34.5, then you should get out now and take a smaller loss, okay? If you can't lose, then you shouldn't be in this game to begin with. You know, we get people, they take trades, they have no idea what they're doing. They have no sense of risk. They just want to make money, okay? But this game, as strange as it may be, is not a game about making money. Making money is a byproduct of good risk management. This game is about risk, okay? So again, it goes against conventional wisdom. It goes against, you know, what we naturally expect, but this is a game about risk. So I'm willing to take that risk that this thing doesn't go to 34.5, but it can go there, okay? So that's what you have to realize. Now, we also talked about the aggressiveness of this long at 39.5 because this broader structure is still bearish, okay? And so far, that bearish structure is still in play, which means it's also possible that we can touch 30K. If we touch 30K, it could even go lower, okay? Sound is low, okay? So I don't know, no one else is saying that. I can adjust that a little bit here. I'll raise it a bit, but I don't want to go, this mic for some reason, you know, I tried making adjustments to it and it was, for some reason, it's still very sensitive. So anyway, okay, I raised my sound a little bit, but maybe it's something on your side as well, unless I see other complaints here. So anyway, so that's the point with Bitcoin. At this moment, there's no reason to buy this thing, but what am I expecting over the next few days? Again, because earlier in the week, you know, we were talking about showing conviction or showing some sort of strength above that 41K area, some sort of confirmation. We never got it, okay? Which means the resistance, that 40K resistance area still stands. It still holds, which is not unusual in a range-bound or consolidation type of environment. Now, over the next few days, even though that's the case, and I know there's a greater chance that we test 30K, I'm still looking for the higher low at 35, maybe 34, maybe 33. Okay, maybe somewhere around there, maybe we get the higher low. In that scenario, we will be stopped out of the aggressive swing trade, okay? And I will be looking for another buy signal if the price action can provide some evidence, right? That's why we wait for the setup, we wait for confirmation, And that usually helps to filter out a lot of would-be stop outs, but it doesn't filter all of them out. All right, so just something to keep in mind. So that's the story with this thing. And this thing, of course, is going to lead all the altcoins. Again, like I've talked about in the show yesterday, a lot of these altcoins, they try to get away from Bitcoin a bit, but Bitcoin is still the leader, right? So whatever Bitcoin does, the altcoins generally will follow. All right, now again, I'm talking from a swing trade perspective. All right, this is not an investment perspective. As far as investing, the price action itself doesn't matter as much as how much size you're accumulating, how frequently. Okay, I've talked about that many times. So the point is, at this moment, Bitcoin can test the mid part of the range, 35, 34K. It can test 30K. Like I said, if 30K is cleared, we can see 26K. So, like I said also, if you can't take that risk and you're in this swing trade, then you have an opportunity now to make that adjustment and take a smaller loss. If it reverses after you get out, you took the loss and it reverses back higher, and you hesitate and you don't get back in, you can miss out on that next leg higher. You have to be okay with that too, because that's also a possibility. All right. If you can't handle these emotional obstacles or these emotional barriers in this type of business, you're in the wrong business. I mean, this is like normal stuff. It's everyday stuff. A lot of people, you know, they got too used to all that nonsense we had back in February, where we had a very forgiving market. No matter how you behaved, the market gave you a reward. But that's not normal. And I talked about that over and over and over and warned people not to be buying these things at the highs. All right, so that's Bitcoin. Let me know if you have any questions. Let's talk about the stock market. A lot of unusual stuff going on here. So we had the FOMC meeting yesterday, right? There was a little surprise with their rate hike schedule, and it led to a sell signal, right? Let's erase today's candle here for a moment. It led to this sell signal right there off of a pretty significant resistance. Now, this is the NASDAQ, right? So, okay, they changed their rate hike schedule, and then today we get this, new highs. Now, Andrew talked about this scenario, squeeze out the shorts because the short trade was too obvious, and that could be the case here. Here we are with new highs on the NASDAQ, which is ridiculous, right? Just speaking in terms of price action. Now, is that an opinion? Yeah. Do I trade on opinions? No. But this is, I just can't buy stocks in this situation. Let's take a look around, right? Amazon. Look at Amazon. Let's take a look at Facebook. Okay, where's Facebook? That's today's candle on Facebook? Okay, not that impressive. Let's take a look at NVIDIA, okay? Look at this. All new highs, okay? Google, on near the highs, all right? I mean, there's, the tech stocks are going nuts, right? Square. So you know, you have these things, but I think NFLX, even Netflix, look at this, green candle today. It's not on its highs, but still green candle. So you're going to hear a lot of talk of sector rotation and this and that and this and that and this and that. And then we take a look at the S&P. Okay, this is the S&P today. So while the NASDAQ is up 250 points or whatever it is, the S&P is only up 12 points. That's not good at all, right? 12 points for the S&P? That's usually like, that's nothing, all right? So today's range on the S&P, the low was what, 41.92? And this thing right now is at 42.25. That's a good, what, 30 point, almost 40 point range. That's a decent range for the S&P. All right, but the point is, the NASDAQ is on new highs. The S&P is not even close. All right, how about IWM? This is the Russell 2000. What happened there? All right, that doesn't look good. There's nothing good going on there. So, you know, my point is this. This market is showing, again, red flags. Okay, this NASDAQ situation, that's a red flag. As much as, you know, a lot of people are going to be happy when they look at their Robinhood portfolio. Oh, look, my stocks are up today. Yeah, that's nice. Right. Well, the thing is, this is a high risk area still. We're still inside the reversal zone. Now, yes, we have a higher low. This is a higher high. But I'm sorry, I don't trust stocks. I would not be buying stocks here. There's no sell signal either. So you can't step in front of this. You know, people right away, oh, if you can't buy them, well, we'll short them. very tough to do because this is not acting in a rational way. And that's another point that I want to bring up. You cannot apply logic to these things. You can't sit there and say, well, FOMC, they said this and the stocks are doing this and it doesn't make sense. Right, because markets are irrational. So you don't ask why. It doesn't matter why. What matters is where, especially on the short term. So this situation right here, okay, it's bullish and this and that, but I have zero trust in this thing. We have to see where it is, in a few days. But even if we go higher and higher, well, we go higher and higher. But I'm not buying stocks in this, especially market stocks, because I just don't buy highs. Was yesterday a buying opportunity? It's a very tough one when you're at a resistance area. People get caught up in what's going on right now, but you have to look at the overall levels, okay? This entire area is not a support, it's a resistance. The supports on the NASDAQ are like here, right? Then you have one over here in this low area here. If anything, if you're going to take a chance with stocks on the short term, those are the areas to do it, not here. So, this may look stellar for the moment, and everyone may be making a big deal out of it. I don't know. I don't watch any news. But don't get lured in by this nonsense, okay? First of all, the risk is high. Focus on the risk. Now, that's the NASDAQ. And then we're going to talk a little bit more about stocks here in a moment. And again, I appreciate your questions. Let's take a look at gold, because this is another one. Some very important lessons here. Look at this mess. Look at this mess. So the other day, I sent out a swing trade, okay, on gold at $18.99 right here. Long, right there. I sent out a swing trade. In fact, I think it's on this chart. Right here, here it is. Right. Look, $18.99 and a half. The same day, it went to the stop of 1869, which, a 30-point move on gold is pretty significant, and it went there like the same day, okay? This thing is 100 points lower from the stop. This is the important lesson here again is this is why you must respect stops, because you can have an opinion and say, oh, gold is strong. I mean, and plus we have inflation. I mean, you see food prices, bread is like $10 a pound, $10, whatever. And yeah, we have inflation. Gold's not going to go much lower. Gold is 100 points lower than our stop. So none of the experts, all the gold experts and all the gold mining experts, and I've been when gold for 50 years and blah 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 blah. Yeah, thanks for letting us know it was going to 1740. What's today's low? Basically 1760s, right? No one saw that coming. So it's not about what is coming, it's about the risk. Our stop saved us from an extra 100 points of loss, okay? That's the way you have to look at this. Now, along the way, we were talking about this yesterday when gold was pushing around 1800. Oh, it's a great price for buy gold. Great price. But were we going to step in front of this? Did I send out a swing trade yesterday for gold? No, there was no reason to. And right at this moment, great, even better price. There's no reason to buy. Do I still want to buy gold? Sure, I want to buy gold. Okay, but there's no reason to right now. This thing may find stability here. Maybe it finds stability at 17.25. Maybe 17 even. I don't know. It's up to the market to let us know. So that's, this is the nature of these type of consolidations, by the way, which is a wave 4. And as long as this doesn't overlap wave 1, which is back here, the high of this is 1755. Wow, it's close. Okay, as long as it doesn't overlap that, this is still a valid impulse wave. Okay, but it doesn't mean you step in front of it. So we have an attractive location on gold, which is also a buying opportunity for mining stocks once it stabilizes. Look at wheat and precious metals. This thing gapped. Okay, this thing, we took some off the table the other day, and this thing gapped. Still in it though. Look at AG. Look at this thing, gap. So these things look ugly right now. Everyone's banging out, most likely overreacting. Now here's another lesson about using logic in these things, because if the market has resumed its inflationary scenario, and let's take a look real quick at the bonds, right? ZN, the bond futures. Okay, hold on a second. ZN1. Okay, bond futures, right? The bond futures. So this was the reaction yesterday. the red candle, and then we have this a little attempt at a rally today. That's really not that significant of a comeback, right? Which means interest rates are still, if this is the case, interest rates are still going lower. Okay, I mean, if this inside bar is taken out next week or tomorrow or whatever, right? This is a bearish trend. There's nothing bullish about this really. Okay, especially since we're on these lows, we have a lower high, this area here, which means interest rates are still likely to go higher. Where the Nasdaq thinks it's going, I don't know. So my point is this: if you apply conventional logic and say, okay, well, we're still so. What's the story here? Are we in the inflationary scenario or are we in the deflationary scenario? Well, I don't know. Someone forgot to tell gold that, you know, we're in the inflationary scenario, which obviously we're not, right? If gold is still doing this. So what's off here? The Nasdaq. My point is, you can't use logic in these situations. A lot of people are probably sitting there scratching their head saying, I don't understand. Why is the Nasdaq doing this? It doesn't matter why. All right, maybe there's some news. It doesn't matter. What matters is the bigger picture, and you know, looking at those other clues. So we have to see. Now the dollar index, right? The dollar index is going to look nuts. If I pull up that dollar index, look at this thing. It looks like Cardano back in February, right? That's what this thing looks like. The dollar index is vertical. You know, I was going to call dollar franc yesterday. If you listen to the show, we talked about dollar franc. Look at this. This is a trade I never sent out way back when, so that doesn't apply to this situation here. But I was going to call dollar franc, you know, off of this close. That would have been a nice trade, but we didn't call that. We called Bank of America instead, which brings me to Bank of America. Let's talk about the trade of the week. Look at this mess. So Bank of America, you know, this is what we chose yesterday on the Talking Market show as our trade of the week. Now a lot of people follow this trade, and a lot of people got stopped out of it. Okay, I saw some messages about it. And look, that's the nature of the market. For one, if you read the information in the email, you know, I made sure to put, you must respect the stop. And you know, again, if you can't take the risk in these things, if the risk is not, if it's uncomfortable for you, you shouldn't trade these things with real money. Now, Bank of America, this situation is unusual, and here's why. This thing took, if you go from this low, what's this low here? 29.60, so basically 30 back in January or almost February there, right? So from 29, so basically from 30 to 40, all right, it took, what, 3 months for this thing to move 10 points? 3 months to move 10 points, right? So I'm like, oh, this thing's a slow mover. This thing's going to take 2 months probably just to move 5 points, especially in the low volume summertime environment. And today we have a range on Bank of America. We have a range. What is this range? 42.06 just got us in, and 39.74 is the low, and it's at 39.81 right now. So this thing basically has a range of, what is that, almost 4 points, or 3.5 points in one day? That's very unusual. Okay, so I was not anticipating that type of behavior. I figured, hey, if this thing to get stopped out, $1.50 stop, it could take a week, maybe 2 at the rate that this thing moves. I mean, look at the average candles, right? And in one day, it taps us in, stops us out. That's the nature of the market. Now, let me give you an example here, because again, we took this trade on the outside bar off of a potential higher low. It looked like that. Would I take this trade again if I saw that? Of course I would. And that's part of the rules-based system that we use, right? So this right here, that's the nature of the market, right? And that's why we look at the risk and we assess the risk and we respect the stop. Now, let me give you an analogy here. This situation, okay, like in Bank of America, if you're feeling emotional because you got stopped out or whatever, this situation is very similar to a round of poker, right? Now, if you're not familiar with Texas Hold'em poker, you should get familiar with it because it is a great exercise in managing risk, which is very similar to short-term trading, especially the type of swing trades that we take. So in this situation, right, Bank of America was showing us a buy signal that was lined up pretty much like all the other buy signals that we take, okay? It had all the criteria in place. The broader trend is bullish, potential higher low, outside bar, okay, fine, okay? Takes out the high of the outside bar, expecting bullish momentum to continue, okay? Not this. Now, the poker analogy is this. This is like starting out, okay? Starting out, your beginner hand, the dealer hands you your whole cards, and you have two aces, right? That's the best possible hand you can start out with, okay? Aces, pair of aces. Now, what do you do with a pair of aces, right? You can play it slow, like some of the pros try to do, or the easy thing to do is you just go all in, because chances are, I mean, you're starting out with the strongest hand. There's no other pair stronger than that, okay? So chances are you should win the hand. So you go all in, all right, before the flop comes out. Pre-flop, all in. Now, everyone folds except for one guy. One guy calls your bet. He can't have two aces. Well, actually he can, because there are four aces in the deck altogether. It's possible that he can have also two aces, but you don't know what he has, okay? But you have two aces. So, all in, he calls your bet, right? Now the dealer has to put out the 5 community cards, and you have to show, you show your hands, right? You show your cards, you show your aces. The guy has 2 kings, okay? So he called you with 2 kings. What comes out on the flop? 2 kings, no aces. You lose, but you had aces, right? This happens all the time in poker. So that's what this situation is like here. I mean, you went in with the best possible hand, the best possible intentions, and this and that, and you still lost, right? That's the nature of the game. So, trading in a lot of ways is a lot easier in a lot of ways relative to those type of poker situations. But my point is, that is like what you're dealing with. So if you can't shrug off that loss and say that's the nature of the game, you're in the wrong game. That's what you have to realize. A lot of people, after you get beat up a few times, like, we took that gold stop out. We got stopped out here in Bank of America. I mean, this could be discouraging, but we believe in our system. We know our system works because we've been applying it for years. So this is just sometimes you have a couple of stop outs in a row. It's the nature of the game. But when you're very confident with your rules and the rules have proven themselves, you don't get shaken by stuff like this, especially if you've assessed your risk. You've accepted your risk because it's, a smaller percentage of your account, which is what it should be. And, it stops out. It's like, all right, whatever. Our winning trades obviously make up for these because typically our reward risk is at least greater than 1. All right. That's why all that stuff is so important. People, again, like I said, they're only looking to make money. So they don't really care about the risk or give it much thought. They just want to get in and they want to get out green. But that's, really not the best way to go about this. You will get rewards in random markets, but then when you run into these situations, it can be very discouraging. All right, so those are the things I wanted to talk about. Now I want to get to your questions. Let's see how much, oh man, I talk too much. I was hoping to get all that done in 15 minutes, but I just talk too much. All right, so let's see what we have here. Elegius, cool, from Lithuania. Hey, good to see you. Are you the Monday guy? There's a guy from Lithuania who likes Mondays because I stream on TradingView on Mondays. Look into HG1. Okay, so copper futures. I don't get many questions about that. All right, so look again. These situations, right? I mean, look at this. This looks like gold, right? This looks like a lot of things right now. This is the inflationary situation. This is the dollar reaction, okay? So the thing actually that doesn't really fit into this puzzle is the NASDAQ, because the NASDAQ should not be as strong as it is in this situation if we're looking at rate hikes earlier than expected. Okay, now maybe there's some other news out that I don't know about because I don't pay any attention to news, but when you see this type of action in these things, that's what you're seeing here, right? And gold is the same situation. Now, with that being said, the bigger picture here is bullish. I see higher lows and higher highs all over the place. So what do you do in this situation? For one, I'd be looking for longs, all right, just looking for, not taking any, because there's no reason to go long copper right now. Although the location is attractive, just like gold. If I get the buy signal in gold, right, I would like to see some stability, but I am open to sending out another swing trade in gold if things can line up. It may take a few days, but I like the location. So you have a good location. Why? This is an old resistance area on copper, right? You have this consolidation back here. If you notice, the high part of that range is where copper is testing now. So it's a high probability area for a reversal. Just too early. You can't step in front of that because if this dollar price action continues, and it can, this thing may test lower and lower. So I would just wait for like some kind of stability. A pin bar would be nice, bullish pin bar inside bar would be nice. A mini failed low would be nice, and that would be a buy signal. I would also look for something similar in gold. I wouldn't be surprised if you get similar patterns. In fact, I mean, copper is a metal too. Look at this situation back here on copper. See this right here? It's the same buy signal that got me long gold at 1899.5. So I would imagine you basically, this is just like a mini gold, right? Just like Ethereum is like a mini Bitcoin, right? It's the same idea. Gold leads, this thing will probably follow. So keep an eye on gold. So thank you for asking about that one. Hey, Wedge, good to see you. Hack, GDX, yeah. So they all got hammered, right? Look at all these things. Look at that. Gaps all over the place. I personally think this is an overreaction, but you can't step in front. Again, this is why, like Andrew the other day sent out some take profits or take some money off the table on wheat and precious metals, you know, at these highs, because that's what you do when markets are at their highs, right? We didn't know this was coming. We can't see this coming. All we know is it's a good idea to take money off at highs. Okay, it could have been these highs here, and this was the same story with all those garbage altcoins back in February, March, right? When these things were at highs, what was I telling people? Take something off the table. Take something off the table. So what do we do with these now? Again, let it stabilize, and let's see if it could find buying activity, right? And there may be another buying opportunity in these things. But right now, I would step in front. Now, again, that's for a swing trade. If you're talking about gold inventory, well, these are some nice low and exaggerated prices. So it's not a bad idea to step in front of it with some inventory, but what controls your risk in that situation is your size. Okay, it's a completely different strategy when you're dollar cost averaging, not to be confused with swing trading. So what controls your risk is size. So in a situation like this, GDX, you know, if your target allocation was $1,000 worth, how much is this thing? $34.86. So, you know, you want to buy, I don't know, another 5 or 10 shares or something like that to fit within your $1,000 allocation, because you maybe have another $500 worth to buy. So maybe you buy a couple of shares, 1 or 2 shares, or maybe 5 shares, maybe 10 shares, right? That's what, $380 or whatever. And if it goes lower, you buy another 10 shares. And then, right, your allocation is filled at that point. But you could play that game. But again, it's not wise to go too heavy until this thing really starts to show some sign of stability. But like if you were going to do this, the smallest bite, 1 share, again, assuming $1,000 allocation, 2 shares, right? If it keeps going lower, I mean, they're going to shake you out of 2 shares. I hope not. So anyway, yeah, so you just have to let them stabilize. Gold will give the signal at some point, right? We just have to watch for it. Hey, Stephen. From the Netherlands. Hey, welcome. Nice to see you. Oh, by the way, I always like to see people are putting the countries that they're from, because on TradingView, I always ask people, you know, hey, if you want to share the country you're from, it's always fun to see. So I'm broadcasting from the northern New Jersey, a greater New York City area, in case you weren't sure where my accent is from, because I don't hear my accent, but I hear I have an accent. Anyway, so yeah. That's where I'm broadcasting from. I had a guy from Brooklyn the other day. Brooklyn, would you believe that? They talk even worse. You think Jersey's bad. You got to hear the guys from Brooklyn. At least that's the way it used to be. All right. So anyway, thanks for joining. Let's see, Matt. Thought it was a tad quiet as well. Okay, so I raised the volume. Okay, cool. Let me see. I tried, because I had a lot of complaints about my microphone the other day, so I tried changing it. Hey, it's Jesse from Poughkeepsie. Can't even pronounce it today. Okay, cool. No problem, Jesse. It's always nice to see you. My one upstate New York guy. All right, Wedge, I was at half volume and you were just a tad on the low side. Okay, right, okay, cool. Yeah, the Q is better, okay? You showed Ford, not Facebook. Oh, was this Ford? Oh, no, this is Ford. F is Ford. All right, this is Facebook. Did I show Ford by mistake? I don't know, before when I was talking about the two. Oh, yeah, okay, maybe you're right. Right. Well, you know, Facebook on its highs. Again, FANG on its highs, but I'm not buying it. I'm definitely not buying this. I think the point tech has big green. Doesn't matter. I think the point is tech all has big green candles. Right. Then that's true. So the thing is with these things, like I said, it's exciting. This is great for day traders, by the way. All right. No matter what big tech we look at. Right? Whether it's like, again, let's take a look at like Amazon, or what else do these day traders like to get into? What's a cheaper one? Shopify, right? I mean, look at this. Vertical. This is great for day traders. Why? Because they can get in, take a piece out of this, right? Intraday action, they're out, and they're not exposed to the broader time frame or broader structure risk or the larger magnitude risk. That magnitude that I'm talking about is apparent here on the NASDAQ, right? This risk is deep if it turns, right? As a day trader, you're not exposed to that, or you should not be, because you should be taking day trade type of stops or that type of risk, small magnitude risk. All right, so anyway, this is an ideal environment for NASDAQ traders. I remember situations like this 20 years ago, which are very unusual, right? Where the Dow and the S&P were kind of struggling along, and the NASDAQ was just going nuts, right? Anyway, so let's see what else we got here. DXY, yep, I took a look at that earlier. Could you please take a look at SEEL? Sure, Andre. Andre, one of our new members. Welcome, Andre. Silos. Okay, so here's the situation. General trend is bullish, right? Higher lows, higher highs, pulled back. Now we have this consolidation situation right here. This can be interpreted as a lower high. So you have to be careful with this. Now, so what do you do with this? Well, I don't know if you're in it or not, but if this thing takes out this low, what is that, $3? Basically, we'll round that to $3. If it takes out the low, that's not what it should do. Okay, I mean, if it's going to stay strong, it should not take out that low. Right now, you have a little mini bearish pin bar here. The market's still open, but I mean, you don't want to see a bearish pin bar here. Definitely don't want to see that if it's going to hold and stay strong, especially in light of the NASDAQ. Now, this is a biotech, obviously, right? I was going to say, man, with the NASDAQ at 300, 250 points, why is this thing negative? It's a biotech, and the reason why it's not a highly correlated stock, which can work in our favor a lot of times, right? Especially with the NASDAQ on highs, I don't like highly correlated stocks. So this is going to be more sensitive to news, if anything else. And you can't really, unless you know the news before everyone else, it's going to be hard to play this thing. But I would watch that level. If it can hold 3 or maybe go slightly below 3 in reverses, you may have a buy signal there. But in order for this thing to change its tune here or change this structure, it needs to take out this range resistance, which is 350. It needs to take that out, right, to prove anything. It needs to prove itself that strength is coming back in. Weak markets don't take out resistance levels, right? They take out support levels. So the market needs to provide the answer there for you. Right now, you're just kind of stuck in the middle. So I wouldn't, there are situations where you might be able to get a better price, like right now, but sometimes it really pays to wait for a worse price, but the market is giving you a better situation. We do that all the time, okay? We forfeit a good price for a better environment. And a lot of times it's better because even if the thing pulls back on you, you're in an environment where buyers are coming in now. As of right now in this thing, it's uncertain, right? There's nothing here. So thank you for bringing that one up. Hey, Schwartz from Romania. Thanks for joining. Back. Okay, Bank of America. People expecting rate hikes. Fed said no rate hikes. Okay, well, so maybe that's new information that maybe they came out with today. I don't know. I don't pay attention to any news. But that may be the whole banking sector got hammered. I mean, Goldman Sachs was minus $10, and that's, a banking leader. So I guess maybe the Fed faked everyone out. So that, again, that Bank of America movement is unusual. And now the Fed is saying no rate hikes, but they changed their schedule yesterday. Wow, that's a lot of confusion. I think that if that's the case, that's going to come back and bite this market in the you-know-where, because why did they say they were changing their schedule yesterday? Right? Do they know what they're doing? Are they confused over there, or are they doing this on purpose? So if they lose the confidence of the market, you're going to start to see supports break. And obviously the S&P and the Russell and the other markets aren't really too excited, while the NASDAQ seems to be the only one throwing the party. Markets, the major indices should move together, right? So if the NASDAQ is pushing new highs, they all should pretty much be close, and they're not. That's a big red flag. So that's why I'm not very enthusiastic about stocks, especially for long term. Okay, hey, Wedge, Bunazia. Oh, okay, nice. I'm not sure what that means. Juan, cheers from UAE. Hey, Juan, welcome. So you want to know about the dollar against the Mexican peso. Okay, Juan, let's take a look. MXN, I'm guessing you're from Mexico or originally. USD MXN, mucho gusto. I speak some Spanish. Okay, so here's the thing. Well, this is not unexpected because it's the dollar against the peso. So the dollar is obviously vertical, right? The dollar, as we look at dollar franc, is looking like an altcoin. So it's this move is unusual. It cleared this resistance, and there's a higher low now established. This higher low is now in place. Okay, this right here is now in place. So what does this mean? Well, if this move stays intact, meaning it doesn't give it all back over the next few days, if this move can stay intact, as you can see, we're getting the bearish pin bar developing. Maybe we get a little pullback, but I would expect the dollar to hold up somewhere inside of this range, similar to that Bitcoin situation we had where it touched just above 41K and now it's pulling back inside the consolidation. In those situations, after a breakout and pullback, I'm looking for the range high, the previous range high, to act as a support. So I'd be expecting something similar off the dollar against the peso here. The key is I wouldn't short this right now, because unless you're day trading or you want to take a very aggressive short, right? You wait for the break of the pin bar low. You could try something like that. I'm not opposed to shorting Forex pairs. We don't short Bitcoin, but Forex pairs, stock indices, all that stuff, yeah, we're open to shorting all that. I'm not against shorting something like this to see if it pulls back, but it's a higher risk type of trade because it's counter this momentum. So the more conservative thing to do in this situation is wait for the higher low to develop around that support area and then look for longs. That's what I'd like to see out of dollar franc, by the way. Okay, it's the same situation. All the dollar crosses, I mean, look at that. It's the same situation. Dollar franc's a little more exaggerated, but it's the same situation. So I'm looking for that scenario out of the dollar franc, and I'd be looking for a calling along. We haven't called Forex pairs in a while because there's been so much indecision and so much just consolidation. They haven't really been worthwhile. But now with this price action, maybe they'll be more worthwhile for swing trades. So thank you for asking about the dollar Mexican, the dollar against the peso. Hey, X, is it a good idea to step in front of Bitcoin and place a stop limit order? Okay, X, that's a good question. Let's go back to Bitcoin. You know what's funny? No one asks me about altcoins anymore. Do I have one in here? Let me see. Please look at ADA. I don't think that's an altcoin. But I used to get all kinds of altcoins. No one asks me anymore. What happened to all our altcoin people? Anyway, I'm just kidding. But no one asks me. So the question is, should you step in front? Well, that's really like a personal decision. If you're willing to take that risk, the thing is when you step in front and there's no buy signal, that opens the possibility of getting a good price, but you're also exposing yourself to the chance where it just goes straight through to your stop, and that happens a lot. So, I mean, I personally prefer waiting for the stability to develop. So I don't like to step in front, to answer your question. I prefer to wait for some kind of bullish candle to develop. Now, when you wait for those situations, again, you're forfeiting the best price. We were waiting for that around here, and we get this big candle. So we got a much worse price. But I'd rather have that candle behind me because at least I know there are buyers at least there for the moment. Okay, maybe it pulls back like it's doing now and breaks the supports, but I'd rather forfeit the better price for a better environment. That's just a more conservative thing. But if you want to step in front, again, you can get a good price, but there'll be those times where it goes straight to your stop. In those times especially, you have to be okay with that and you have to respect that stop. So good question. Okay, my target is 42K, but price hit 41.3. Your plan O is helping me, Shayshank. Oh, cool, Shayshank. Well, I'm glad. Yeah, this thing, it got stuck at that resistance, and we know that this is a resistance. We took that trade betting that it would clear the resistance, right? Because we have this double bottom, triple bottom situation at 30K, and it's just having a bit of trouble. The good part is, at least we don't have a long exaggerated candle like this, right? We don't have like what gold looks like. That's good. So the selling here is not as pronounced. So maybe that absence of selling will eventually turn into a buy signal. That's where, if you're willing to take the risk, you open yourself up to that type of positive outcome. It's all about your willingness to take the risk. If you can't take the risk, that's why I tell people, get out now, take the loss. Take the loss while it's smaller, and then try to get back in if the buy signal develops. You may get a worse price, but at least you're waiting for the other buy signal. It's a really important part of how you make decisions. Some people are more aggressive than others. Okay, so good question. Stephen, okay, thanks Stephen for pointing out that I put Ford instead of Facebook. Sometimes I can't even see things here. All right, cool. Hello from Switzerland. Hi, Kudo. What are you waiting for, expecting in gold? Okay, so I went over that earlier. If you just go back to the video, I talked all about gold. But again, I'm just looking for the buy signal. At this point, though, I mean, gold is so beaten up at this point, which is great because we've got good prices. Just need some stability, okay? XAU, USD, there's no stability here at the moment. So that doesn't mean it's going to keep going. All it means is it might keep going because there's no reason to buy. So I would like to see an inside bar. I would like to see maybe an attempt at a pop-up and then maybe pull back and test the low again and give us a double bottom. Maybe pop up and give us a higher low. Some sort of stability, not just these big red candles. Because again, you say, well, why not? This is a great price. Right, and you could have made that argument yesterday too. You could have said, well, why not step in front of this? It's a great price, right? But the price got even greater. And that can continue. So you have to respect the market in that way. That's why I prefer to wait for structure and stability before stepping in front. But like I said before, there are aggressive traders out there that are willing to take the risk. In those situations, if you want to step in front, you really, really should place a stop. And if it goes to your stop, take the loss. Because there are times when there'll be an unusual move and you will get caught in it. Right now, I'm sure there's a lot of people caught in this thing right now who didn't put a stop, and now they're stuck in this thing, and and they're at the mercy of the market. You don't want to be in that situation. So thank you for asking about gold again. Okay, Eligius, maybe some analysis on VAL3. Oh, isn't that Volkswagen? Let's see, VAL3. Yeah. So okay, here's a good one. We all know Volkswagen. So here's the situation. General trend bullish. This kind of looks like some of the other car manufacturers too, right? Strong stock like Ford, that kind of stuff. Nice higher low situation developed here. Now this thing is likely range bound because it has not made a new high. See this failed situation up there? That's you could say that's a triple top or whatever. 248, right? That's euros, right? 248 euros. Now, we're pulling back a bit, excuse me, pulling back a bit here, possible higher low relative to this structure, all right? That's not bad. Now, today's candle, we had a pin bar yesterday, signal to go long, and now it kind of gave it back. So when I see something like that, that's a little, I don't like to see that. If I got long on the pin bar and the next candle is inverted, it turns into a bearish pin bar. I mean, again, candles are random also, but I don't like to see that just after I got in. So in this type of situation, if you're in it, hopefully your risk is defined from around that 220 area. It really should not go below that. If it does, there's really no support unless you look at like maybe 210. And what's this pin bar low here? 198. So you're looking at like between 200 and 210 is your support area. So you have to watch out for that, if you have not calculated that type of risk. Either way, that would be the area to be looking for a long signal. Now, if this thing can show a little bit better stability, like it tried with the pin bar, all right? It tried with the bullish pin bar, and that would be a worthwhile attempt at a trade, right, when it looks like this. But when it doesn't work out, maybe it gives us a failed low. Maybe it gives us a mini double bottom. So it's worth giving it a try on the long side as a swing trade once it can give a little bit better confirmation than this. But the reason why I'm saying that, even though we're possibly in the middle of a range here, the reason why I'm saying that is because of this structure right here. I mean, that's a nice bullish structure, which is part of a broader bullish structure. So this basically is like a wave 4, and this might be the middle of it, and it might, this thing could possibly find support in that middle and work its way higher. but because of this the broad nature of this move, the magnitude of this move, that's the only reason why I have any type of optimism in this thing. Otherwise, if it clears this middle area, look for the range low, which would be a much higher probability if it can get there. All right, so thank you for asking about that. It's a good question. All right, let me see what else we have here. Shashank. Okay, so, I remember this stock. This is a stock on the Indian exchange, right? I remember, I think you asked about it. Someone else asked about it too. I remember this stock. So let's see how these stocks have been doing. Now, I mean, look, this thing has been nuts, right? Just higher lows and higher highs all over the place. So here's the thing. People get used to this, right? Because it just keeps just going higher and higher and higher. Now, you get this kind of pullback. So at this moment, while it is getting into more attractive area, a much more attractive area, you have this little consolidation area right there on the chart, it's still too early to get into this thing. I don't know if you're in it. If you were in it from lower prices, I hope you took something off the table when it was looking spectacular. That's usually what you should do when things look spectacular. But at this moment, I would hold off and let this thing stabilize. Now, you can argue and you can say, but isn't this an inside bar relative to this large bullish pin bar situation right here? Yes, but it's mixed because you have these bearish candles before it. So this is not exactly an ideal inside bar situation. I would wait for this thing to stabilize. What you want to see for a long, right, because there's no reason to go short something that's generally strong. What you want to see is some kind of stability develop around this price area, which is what? What is that? Around 1,300 rupees, around that area right there. You want to see a failed low, a higher low, an inside bar, something bullish develop in this area. At least it's worth a try. You can define your risk from 1477. So I guess we're around 1470. So maybe you round that to 1450. That would be where you define your risk from. And you'd want this thing to at least attempt to go toward that high. You know, you'd be looking for targets near that range high somewhere, all right, which is around 1630 in that area there. I wouldn't be very optimistic about a new high, although it's still a possibility based on this structure. Now, the things change. Your expectations should change when supports are cleared. Right now, this is your support. It's not cleared. It hasn't been cleared. If price starts pushing like these levels here, what is this area? Like basically below 1200, then your first support is cleared. That's when things could be changing and you may be in a broader bearish structure at that time. That's when you have to adjust your expectations in that type of situation. Okay, so thank you for asking. Andre, please take a look at MNMD together with SEAL. They are top holdings. Okay, let's take a look. Oh, psychedelics. Oh, drugs. Okay, drugs. Let's take a look. Mind medicine. I'm sure it is. All right. So, you know, after the whole cannabis situation, I'm not a big fan of drug stocks. You know, recreational drug, whatever you want to call these things. But hey, I'm not going to judge, right? Let's just look at these from a charting perspective here. So MNMD. Here's the thing. This obviously is a newer stock. This situation right here, that structure is bearish. Since then, it gave you a higher low, all right? Started to try to change, took out a resistance, trying to change. But it's hesitant here. This is a tough spot. You know why? Because this whole area right now, this area here, actually, let me highlight it a little bit easier. This area right here, right? Just that area right there. We can still argue that that's a lower high because it tried to break out, gave you a failed breakout, gave you these red candles. It's trying to break out again. But I would not, you know, it's aggressive. Let's just put it that way. If you want to get involved in something like this and go for the breakout, it's aggressive. You should define your risk from this low. What is that? 346, 350 area. It's around the same price of the other stock that you gave us, SEAL, I guess. There's a very good chance it can go to that stop, right? And you have to take that loss. That would establish the lower high. I'm sorry, I think I called that a lower high. Sometimes I confuse the two. It sounds like I'm saying the same thing, right? I'm thinking one thing, I'm saying something else. Anyway, if this lower high is established, then you're looking at testing the range low again, because that's a function of this large structure right here, which is still, we can still argue, may have some effect. That's how I would treat that right now. But again, these things may move on their own news and stuff like that. They're probably not highly correlated market stocks, I would expect. So that's how I would play something like that. Again, good chance of getting stopped out there. If you want to wait for higher probability, you're better off waiting for a test of the range low, or at least some sort of attempt at a higher low, like something around this area here, which is what is that area? Around 3.25, maybe near 3, and then you get some sort of reversal there. At least it's nearer a support, and at least there's a chance you test this range high again. Okay, something like that. So thank you for asking. What's nice about these community streams that I do is people bring up a lot of different markets and stuff that I may not be paying attention to, and we all get to see a variety of markets together and different reward risk profiles and stuff like that. So I think that's really cool. Anyway, thank you for bringing that up. Okay, Wedge. Bună ziua is good afternoon. Oh, Romanian. Oh, okay. I was seeing a little Latin in there because, you know, in Spanish it's what is it in Spanish? Buenos dias. So I can kind of see that in there almost, right? In Italian, it's buongiorno. So anyway, it's a little language portion, a language lesson portion of the stream. But that's cool. I didn't know that. I'm sure I'm not even pronouncing that right. But Romanian, cool. Was for Schwartz. Okay. I collect languages like some folks. Oh, nice, nice. Well, languages are also very interesting. So, Abraham, you were talking about failed low. Can you explain a bit how we can spot it? Sure. So a failed low. Let's see if I can find one. They're usually pretty easy to find. Let's look around. Since no one asks me about altcoins anymore, let's pull up some garbage altcoins. Okay, here's Litecoin. All right, so there's a failed low in here. Let's take a look. So a failed low is basically a low, right? So you have like a lower high, and there's two types of a failed low. You have the lower low. This is the typical kind, right? Lower low, so everyone thinks it's bearish, but then the next candle reverses in everyone's face. That's a failed low because it should have went lower. But then you have the higher low. I guess I shouldn't say there's two types because, I mean, the other type I was going to say is basically a higher low, right? It tries to go lower, but it's much higher than the previous low. There's another failed low here, and it's this one right here, the pin bar, right? So let me make that nice and big so you can see. So the pin bar at one point was lower than this previous low. What does that do? Keep in mind, at one point, that pin bar was a full red candle at one point, right? So that sucks in a lot of shorts because, oh, it's a lower low, and they're watching their 5-minute chart or they're watching their 30-minute chart, and they tell all their friends, oh, let's all go short. And all the fake gurus, you know, on YouTube, oh, let's all go short. Great. And then it turns into a pin bar. That's a failed low because it should have continued lower, but it failed. And you get this nasty bullish candle right after, which is all of them getting squeezed, right? That's a typical pattern. So that's a failed low. Failed highs work the same way. So thank you for asking about that. All right, let's see what else we got here. I should charge you for that kind of lesson. All right, Shashank, I think Bitcoin again slowly going to 42K and again retest 38K. Maybe, okay, because of low volume or just like poker game. Well, so Shashank, I mean, yeah, look, anything is possible. With this Bitcoin situation, at least, like I said before, at least we don't see a dramatic red candle. Now, things can change, as we know, but if the speed of the candle, or I guess we could say the size of the candle, right, the range of the candle, is something we can consider. The fact that, you know, it's not selling off dramatically can be interpreted as a sign of strength, but you can't really trade on that because we don't know, right? This thing can change. Some news can come out. Elon Musk can come out, you know, in the next few hours, and he can say, "Oh, Bitcoin sucks. I'm shorting it." Right? And now Bitcoin's back at 26K. So that's why you can't make judgments on that so quickly. I'd prefer to let the candles confirm. So thank you though for that observation. Thorium, hey, from BC, hey, British Columbia, nice. Can you check out Monero? Oh, there we go. There's an altcoin, XMR USD. I mean, a couple of months ago, all I got were altcoin requests. I never got any other type of, maybe a couple of stocks, but now I'm getting, a lot less. Anyway, interesting observation. So Monero. Now, Monero is acting relatively strong relative to Bitcoin because we see Bitcoin is not acting so great, but Monero is showing a bullish inside bar after this little attempt at a push higher. Now, we all know that all these altcoins, now Monero tries to do its own thing. It's tried to do its own thing before. But when Bitcoin makes a decisive move, Monero still follows. So while this is relatively strong, meaning if Bitcoin finds strength, this can turn into a buy signal if it takes out the inside bar high of what, 281.5, right? That would be a higher low, and I'd expect a leg higher. But Bitcoin needs to agree with that. If Bitcoin breaks 34K, this inside bar will probably, turn into a red candle, right? And you're looking at these lows again at 237. So that's how I would treat that. So if you want to be aggressive and you want to maybe take this as a relative strength play against Bitcoin, right? You need Bitcoin to do its job. Always keep that in mind. If Bitcoin doesn't agree with you, this thing is not going to go very far. But this chart alone, it's a sign of relative strength. The reason why relative strength doesn't work as well with these altcoin charts is because the altcoins don't trade on their own. That's the thing. Okay, if this was a stock and the S&P was red, like Bitcoin's looking, and this stock was showing something like this, that means as soon as the S&P turns and starts to go green, this thing will probably go green faster. That's the concept of relative strength, which is not to be confused with the RSI, or relative strength index, completely unrelated. It's just the same words. So anyway, but thank you for bringing that one up. I hope that helps. Let me see. One of my Talking Market show is about video game markets, maybe about UBI. Oh, okay. So no problem. One of the talking oh, right. So video, right. We had a guy. We had our guest come in. Steve. What was his name? I forget his name. We had this guy come in. John, I think his name was. And he was talking about video games because he's like a video game teacher or whatever. Teaches people how to make video games or something like that, right? Right. He was Henry's friend. That's why I don't remember his name. Anyway, but nice guy, young kid. So yeah. So let's take a look at Ubisoft. These video games. Look at this. So general structure. Let's start with the general structure. The general structure is generally here. This is bearish, right? Lower highs, lower lows. See that? This thing should not be so ugly, right? Now, also, not only that, it's respecting resistance levels. See this here? This lower high? It respected it, right? This right here. Now, you can argue that there's a higher low. Okay, that could be the beginning of a change. This could be the beginning of a broader bullish move. But at this moment, we have the higher low in place, but it hasn't cleared the resistance yet. Needs to clear that resistance. Now, you also have a pin bar, bullish pin bar in this area. So I would consider something like this an aggressive long swing trade long. It's aggressive. Why? The bullish pin bar is a good sign. You need momentum to follow through. It needs to take out the high of that bullish pin bar. You need to clear this resistance. If you can do that, if this thing can do that, then you should be in good shape. Your risk can be defined. You can use the pin bar low at 58.12, or you could use the higher low, what is that, 56.82, which gives you a slightly higher risk. You have to decide if you're interested in taking that type of risk. If it works out, you could be at the beginning point of a new structure. So just something to keep an eye on there. If it fails again, right, tries to pop up and fails again, like you get a green candle followed by like a red one, kind of like this situation here, then it's respecting the resistance, and that's when you need to make an adjustment, because most likely that lower high stays intact. You're probably going to take out this support. Okay, that's what the market is saying. So right at this point, it has to choose, and if you want to give it a chance, if you want to take a risk while it makes that choice, that part is up to you. You have to decide if it's acceptable or not. So thank you for bringing that one up. It's an interesting situation. The more conservative thing to do is to let it clear the resistance and then look for trades, or something like that. So thank you for bringing that up, Ubisoft. Okay, travel. Would you like to comment on this? Okay, so let's see. He has a comment here. Now, I don't follow anyone on these things. The problem with it is in most things is, I've seen this. I remember. I think you may have mentioned, someone mentioned this. If you don't know how much leverage is, then you don't know anything about cryptos, no matter how much else you think you know. That's an interesting comment. Now, obviously, if you don't know who this guy is, he's the movie, The Big Short was a movie he was one of the characters that they based it on, the movie or whatever. He basically called the 2008 financial crisis, and he was short before everyone else. He had to take some pain though, but it eventually worked out. He was right. Okay, he based it on fundamentals. Anyway, that was a quick background on him. Now, do I respect the guy? Of course. Now, so his comment about that, I have to agree with it, because the thing is, people don't realize how much leverage a lot of these exchanges, whether it's Binance, BitMEX, I think even Coinbase Pro offers leverage. People are using that leverage, which means there's a lot of fake money, a lot of paper money floating around out there in these positions. And I mean, he made that comment a while ago. And when the party is over, there's a good chance that everyone is forced out of their positions. When you use leverage, you're kind of at the mercy of the broker. If you don't have any stops and you're like, well, I'll just, it'll come back for me like it always does, right? Well, when you use leverage, that's when the broker is not going to take the loss. They're not going to let your account become a big liability for them. So what they do is they margin you out of the position. They have, if you look at their fine print, and all of them have this, especially Forex brokers, they have this thing in there where they say, when you go beyond your maintenance margin requirement, we will close your position for you at a loss. And that's because they don't want to, your account is not going to be a big liability for them. Some people take some ridiculous size, and the broker's not going to take that loss. So they close out the position. Now, for Forex brokers, they're on the other side of that position, so they pocket the money. I mean, they say they don't, but they do, right? That's why Forex is like the worst business. As from the trader perspective, it's a really bad business, because the broker is, of course, going to do things that are not in your favor, or the dealer. So the point is, the point about the leverage is, if all that leverage hits the market at the same time, meaning Bitcoin has a dramatic move, to 26K or 20K, you're going to see a lot of margin calls. And what does that do? It creates more selling pressure, right? Because all those positions have to be forced, they have to be sold or liquidated, right? They all have to be sold, and it creates more and more natural selling pressure, right? And that's when you get those really, really big pullbacks, and no one can figure out why. Well, yeah, so I agree with that, and that's why, for one, I've been telling people all along that all these coins, especially as far as investment grade vehicles, unless you're talking about like the leaders like Bitcoin, we can say Bitcoin is the leader. It's the first, basically the first to show, whatever you call that, right? What do you call that? The first to market. Bitcoin is the first one we all knew about. Bitcoin was the first one created, right? It was the first, right? Ethereum is like the second, right? So you have the first player advantage, whatever you want to call that. The rest of these coins, how many ever there are, 1,000 of them, 2,000 of them, they're just copies. So most of them, there's no financial oversight in this space. And people, meanwhile, they have 100% of their portfolio are invested in these garbage coins. And that's a problem when there's no oversight. You know why? Because the guy from Cardano, as nice as he is, and he's doing all this stuff, and he's going to bank for the unbanked, and all those other great ideas, they don't have to tell you the truth about anything, because there's no oversight. They can just make up nice stories, and all you're doing is buying them homes and cars by investing in their stupid coin. So they don't have to tell you what they're doing with their money. When you have a stock, and the stock is regulated by the SEC, whatever that company does, they have to report their balance sheet, right? Their income statement, how they're spending your money. There's a record of it, and they have to file that information publicly, unless it's an over-the-counter stock, right? But we're not talking about OTC garbage stocks. We're talking about real stocks, stocks like Intel, stocks like Walmart, stocks like Facebook, right? Stocks like Google. We all know those names. Well, they have a special responsibility, and if they don't follow the rules, they run into big problems. These coins don't have any rules. So that's why they're not investment grade. And people that have 100% of their portfolio, the reason why they got into this situation to begin with is because their friends or someone got a lottery ticket, right? A lottery ticket. So they made a lot of money because they had a few thousand coins of some junk coin, and it went up 10,000%, And everyone thinks that that's the norm. That's a lottery ticket. It can happen, but it's a lottery ticket. Just like when you go to the store, you buy a lottery ticket for $1 and you win, okay? We all know there's no skill involved in that. It was a lottery ticket. It's the same concept. So these altcoins, most of them, that's why we say they're mostly garbage. The ones that will show proof of value in the future, no one knows. Like Amazon 20 years ago, no one knows. So a small percentage of them will. Which ones? I don't know. So, somewhere along the line, the charts will separate the garbage from the non-garbage. But I can tell you one thing. If anything, the leader in the future will probably be Bitcoin, unless something changes, right? If there's some kind of fundamental change, Bitcoin becomes obsolete. I would say it's a pretty decent bet for Bitcoin and Ethereum that they'll be around because they actually have a number of advantages, right, that they're still enjoying. And so far, no other coin has been able to do better than them, although they claim that they can do better than them. Anyway, all right, so that's enough of my rant on that stuff. I'll talk about that all day if you let me. But I have to stop myself. All right, I have some more questions here. So thank you for mentioning that. Travel. Okay, Shubham. When tapering will happen? Gold. Okay, right. So Shubham, that's the Fed, right? I mean, look, I don't know what they're doing. I don't know if they know what they're doing, right? At this point, I don't know. But the thing is, they said from what I read on the internet, because I looked around just to see what the outcome. I looked for the headlines just to see what the news says the outcome was, because I was just curious. And it said something about the rate hikes were moved slightly earlier, right, by a year or something like that. To 2023, they were expecting 2 rate hikes, something like that, they said. And so who knows? The thing is, because they put out that little hint out there, and I don't know if they changed that again. I don't know. But it means that most likely they're either they were wrong about inflation, or they're not telling anyone what they're going to do, and they may come out with hikes sooner than expected. That's why the market was uncomfortable with that when they came out with that little comment yesterday, right? Because it's inflation, but you said there was no inflation. Inflation, we weren't going to see rate hikes for forever. But now you're telling us in 2 years instead of 3? That's no good, right? They call that hawkish talk. So there's no way to know. The Fed may surprise us with one, with the market. They know the market will not like that. So I don't know. You know what? You can't sit there and try to outguess the Fed or try to outdo the Fed. You just have to look at the price action and wait for things to unfold. If the Fed throws a curveball, that's why we mitigate risk, right? That's why we use stops. That's why we have to control risk with size, because that's the best we can do. The Fed basically acts as just another piece of random information, just like if Elon Musk comes out and makes a comment and Bitcoin pulls back 30,000 points. Okay, so good question. All right, let's see what else we got here. And how am I doing with time? Okay, I got to wrap this up soon, but I appreciate everyone's questions. This is not as wild as when I'm on TradingView and I get like 10,000 questions. All right, let's see. Also, why only NASDAQ? Okay, so Shubham. So like I said earlier in the stream, why only NASDAQ? Obviously, there's a reason. I don't know the reason. And like I said before, I don't care why. All I care about is where. This in terms of logic, this doesn't make sense with what's going on. But I don't fight it. I'm not going to sit here and argue with it and say, well, this is wrong. I'm going to short everything because this can't be. I'm not going to fight it. The market's going to do what it's going to do for whatever reason, okay? I'm looking at levels. All I know is this level is a high-risk level for longs. So I'm not interested in longs here. I am interested in shorts, but there's no reason to short at this moment. It's a higher high, and it's a solid candle. Now, maybe tomorrow, maybe early next week, we get a complete reversal of that. But until I see something like that, I just stay out of its way. I'm not going to buy stocks, and I'm not going to sell them. Flat is a position. There's no need to, you don't have to trade. This isn't like in a poker game, you have to bet. Okay, there are the blinds. If you sit at the poker table and the button goes around, it's because you have to bet. You have to basically, you can't just sit there an entire day and not place any bets. You have to play a blind bet. In the market, you don't have to do anything, right? Nice thing about the market, you could stay out as long as you want. Okay, so anyway, I say okay a lot, I realized. I got to stop saying it. Let me see what else we got here. So, okay, no problem. So, Hack, since Bitcoin was first, you can apply Metcalfe's law. So, Hack, do you want to share in the chat what that is? I'm not familiar with that specifically, but why don't you share that? That's a nice thing to learn today. We should always learn something. So yeah, so this NASDAQ situation again, just stay out of its way, and we'll see how it goes. I just view this as a red flag, but as I'm saying here, I'm not trading on that an opinion, right? It's an opinion. I believe that the NASDAQ is overbought. I think it's in a ridiculous high risk area. I could be wrong, but you don't see me betting money on this, right? So I can think whatever I want, but I don't have to take risks. When the market lines up and fits the rules, and I can define my risk in a way that is comfortable to my risk profile, then I can take a risk on the short side here. I tried a couple of shorts, in fact, I still have my SQQQ. I'm still in that stupid position, but I bought a lot of time. I opened up that position back here. Okay, that was back in April. And this market tried to go our way, didn't really pay much on those stupid options, and now it's against us again. Now, because I bought so much time, the options are only against us like maybe 50%, which is, that's not too bad. I bought January options, all right? So I bought them for like $250 or whatever, a contract, and now they're like at $130. Maybe they're a little less now, but whatever. I mean, I still got plenty of time, and this market still has plenty of time to pull back. But if we pull back and I can break even on those, I may get out. I may get out of some of them because this thing sucks. Being short this market sucks, okay? It just does not pay. Even though when it tries to pay, it still doesn't pay. Anyway, so that's the story there. Any other questions? Any other questions? Maybe Hack will tell us what Metcalfe's law is. Or anyone else that knows what it is. Maybe someone can Google it and then type it in, because I'm too lazy to do that. Any other questions? I appreciate everyone's questions. And thank you again for watching my stream. If you can, like the video. I mean, that always helps out. I also appreciate everyone's feedback. I try to stream twice a week, right? Mondays and Thursdays. I'm on TradingView also on Mondays where I simulcast, and I can answer questions here. I can answer questions there. Okay. Also, if you'd like to know more about what we do, Greenbridge, if you click on the Show More portion of this video, all the useful links are there. Options are okay. Only understand puts. Okay. Well, so Shubham, yeah, options could be a little complex, but honestly, that's all you really need to know is, calls. If you buy a call, you're looking for a higher price. If you buy a put, you're looking for a lower price. You just need to understand what happens when you short an option, because that's really where the money is made. Long options, especially right now, are a bad idea, okay? Because out of the money premiums are at ridiculous highs, and that means that there's a lot of hot air. So it's advantageous for people to sell options, whether it's a put or a call. You just have to really understand what you're doing. So, okay, cool. All right, cool, no problem. So yeah, I'm gonna just wrap this up here. Again, if you want to know more about Greenbridge, you can check out the links. And we have a 7-day free trial. Let me just say this. We are not a day trading outfit. So we don't have lots of trades. We get new members, they come to us, they're looking for trades, and there are sometimes a whole week or two maybe go by. The 2 Bitcoin trades that we had recently, I mean, it took 3 weeks for us to even get to those, because the market, that's just the environment of the market. That's the nature of the market. We don't force trades. Now, let me let you in on a little secret. A lot of vendors out there, they know that people want action. So what do? They just come up with random trades because that's what people want. Whether those trades work out or not are random. So some will work out, some won't work out, and they don't care, right? Meanwhile, so that you're getting action and you think that you're getting what you paid for. Meanwhile, your account is not going to reflect anything positive, right? Because a couple of random rewards are not going to make up for all the losses that follow, especially if you don't know how to manage the risk around those. So I have to mention that again because, we get people signing up and they're like, where's all the action? We don't promote action. Our strategy is swing trading. So we hope to get a couple of trades a week across the different markets that we watch. And there are some times where it's just flat as a position. It's better to stay out of the market. I mean, look at that Bank of America trade. right? That was a trade of the week that we send out to thousands of people, and it stopped out, right? Like in the same day, which is very unusual. So, you know, I mean, that's the nature of the market. So you just have to keep something like that in mind. And Bank of America is a tame stock. That thing doesn't even move. So, you know, just to let you know. So if you come to Greenbridge and you want to check us out, again, you'll learn a lot of things. You're going to learn a lot about patience and waiting and market perspective. But we don't call lots of trades. So I just want you to know that. But you learn how our strategy works. And we have members that have been following us for a few years now. They've been in our room for a few years, and now they're able to put trades together on their own because they understand the criteria and how that criteria needs to be adjusted as the market environment changes. Okay, so I'm going to leave you with that. Let me just see what else I have here. Metcalfe's law states that the value of a telecommunications network is proportional to the square of the number of connected users of the platform. Oh, okay, I've heard that somewhere. Right, there's no way I could have put it in those words, but yeah, okay, cool. That's very interesting. Thank you. Oh, wow, Shay Shank, I didn't realize you've been following me that long. Thank you, I appreciate that. Yeah, I've been active on TradingView for a few years, and you know, putting out Bitcoin ideas and stuff like that. So anyway, my objective is to provide that perspective and to give you more confidence in your own decision-making process. If you cannot make a decision on your own and you have to rely on someone else, whether that someone is on Twitter, if they're in a chat room, if wherever they are, okay, you're never going to be able to manage risk when you're on your own and the market throws a curveball at you, right? That's what you need to be able to do, and that requires a certain level of confidence. That confidence comes from understanding what's possible relative to what you're willing to risk. So that takes a little time. You're not going to get that like in a couple of days. But once you understand that risk part, you know, that's when you have more control over the situation. And that's what we lack in this game. The only thing we control is risk. We can't control anything else. As much as we want to, and we want the market to go our way and this and that, we have no control. It's highly random. So that's where, and then emotions get involved, and you think, well, maybe if I hope some more, the market will turn around and go my way. And in some environments, like we just saw, yeah, the market is forgiving, as we like to call it. But we have not seen a harsh market in a long time. And when we do, a lot of people, that's when you're going to see a lot of people with their 401ks complaining and all that other stuff, because they're just in that buy and hold, and you know, hopefully, hey, they're generally friendly. Markets are, you know, investing in stocks is generally good, right? That's what my Robinhood account said. And I went to my investment advisor at the bank and they said investing is good over the long term. Why is my account cut in half? Right, those people. So, yeah, investing is risky, always risky. And you focus on the risk. How much risk are you willing to take? There are some investments or trades carry more risk than others. Get good at assessing risk. That is what we specialize in. Okay, anyway, enough of my advertising rant. Not really much of an advertisement. I don't sell hope, as you know. I don't sell dreams. So anyway, reality. If you like reality or you're more interested in reality, check out Greenbridge. I'm not much of a marketer, am I? Anyway, all right, I'm going to leave you with that. I'm just talking too much here, and I like to talk. So I got to stop. I got to stop talking. I started following a month ago. And sharp wit? Wow, that's a nice compliment, Thorium. Not too many people say I have sharp wit. Just applying his style of thinking to looking at my charts. Oh, I appreciate that. I appreciate F Robinhood. That's funny. Hack, we need those people. Hack, someone needs to take the other side of our trades. We need those overreactive, uninformed, emotional crowd of herd mentality people. That's generally who uses that application. No offense if you use the application, or I'm sure you don't, but you know, that's generally who uses the application. Okay, that's their choice though. They don't have to be uninformed, but that's typically the choice of, you know, whatever. Okay, anyway, enough. Before I get myself into trouble here, I gotta stop talking. I appreciate that. I appreciate that. Lithuanian. I appreciate. Okay, everyone. So again, thank you all very, very much for listening and for the kind words and for your support. Again, if you have any questions, you know where you can find me. Again, wherever you are in the world, enjoy the rest of your day, the rest of your evening. And thank you so much for watching. I'll see you next time. Thanks for watching.